Let's bring in Chris Hyzy of Merril and Bank of America Private Bank for some answers. Good to see you.
You too, Scott.
That's the key question. What's the answer?
I think so.
It's run its course?
Yeah, I think it's run its course. You know, everyone's been saying there's no V-shaped recovery here. It's probably a jagged V. Bottoming processes are underway. But here's what we think is the topper, which is sentiment is so poor right now.
Yeah.
And at the same time, you're seeing no new lows from the previous lows on a 52-week basis. Credit spreads tame. You've talked a lot about that. The puzzle just is not there to suggest that things are going to get worse. Yes, there's a lot of uncertainty, a lot of bearishness. There's a lot of CapEx on their hands at this point. But what no one is talking about is the potential positive surprises that are out there, like earnings season.
So you actually think earnings are going to be good? And you think the guidance is going to be good?
No. I think the bearishness is so poor that it's expecting that. And I think that any positive signs that says, you know what, we're not seeing that much further guidance lower. We're just seeing some stability. And yes, we know what's coming down the pike. And leadership changes are going on at the same time. So if you get a leadership change, which is happening, it's been happening for months, and you get all this bearishness, what happens next? You see these possible green shoots that occur, and it catches the market by surprise. We've seen this time and time again, especially in March.
You know who's not talking about the good? The administration. They're not talking about the good. What's the good? Deregulation and tax cuts. That's why the market can't see through this fog and get to the other side to start feeling jazzed up about what is allegedly coming down the road.
Right. Yeah, I think that's a good word. It's fog. Fog is out there. It's probably extended a little bit more than people want, too, into the summer months. But markets don't wait for that. They're going to start discounting things in the back half of the year in the next month or so. And that could be deregulation. It could be other surprises in the extension of the tax cuts that we just don't talk about right now. And then ultimately what happens next year. I know we're getting ahead of ourselves yet, but that's the real productivity enhancement is next year, not this year. There's still a lot of rules to be understood yet. But the markets are discounting, you know, all the bad right now. And they're extrapolating it out. And the consumer, this is where it gets interesting. Everybody extrapolates the bad news and all of a sudden says, well, the consumer is going to start to see that and the soft is going to go into hard data. Things are muddy right now, but the consumer is resilient. And we expect that to continue.
Why?
Jobs. It's all about jobs. We don't see anything out there that suggests jobs are going to all of a sudden in the next 6 months just create the non-growth out there that everyone is expecting.
What happens if you have a bad number on Friday?
I think it'll ultimately be more noise and it'll continue this momentum to the downside. So that's why we expect this like sawtooth bottom, not necessarily what we've become accustomed to, which is this V-shaped recovery.
Okay, so it's, in a sense, it's so bad it's good, right? People are too negative. What would you buy now if you were trying to look out through this fog?
So if you're an investor that, generally speaking, is usually fully invested, and you've got cash coming in, we'd be buying on weakness right now. You want broad market exposure? Look at the equal-weighted S&P to add to what you already own. If you're looking at sectors, financials, oversold. Consumer discretionary, the worst quarter in a really long time. Yeah. Oversold.
For a reason.
Absolutely for a reason, but that's what gives you the bargains to buy into a sector that should actually show you that things are going to be stable.
So by equal weight, does that mean you don't think tech is going to lead from here?
That's a great question. Tech is splitting. Price to growth has come down to attractive levels for some of tech. That should be more in the software. Cybersecurity area of tech should be the new leaders over the next few years. It's kind of been taking a back seat to the infrastructure end of artificial intelligence. So instead of all tech, it's now splitting. And you'll see some leadership in tech, but not completely across the sector.